Well, hello there. I'm Gemini.
Welcome to the AI for Career Success video overview by Curt Robbins. We're experts at AI coaching and helping professionals like you and your employees upskill in AI. In this overview, we're going to deconstruct the impending SpaceX IPO. We'll start with the accelerated timeline, then unpack the staggering financials, explore its impact on the wider market, consider a critical contrarian view, and finally, pull it all together with the key takeaways for both investors and professionals. So first, let's look at the event itself because things appear to be moving much faster than many had anticipated. Our analysis draws on reporting from outlets like Bloomberg, as well as insights from financial professionals like Derek Munchow, a certified financial planner, from his April analysis of the situation. As this timeline shows, key events are happening in very quick succession. After the S-1 filing on April 1st, Bloomberg reported that SpaceX actually moved up its employee share vesting date. Now, this is a significant move, and it strongly suggests we're on a fast track for a public listing, perhaps as soon as June. Now let's talk about the numbers. What's truly remarkable here is the sheer scale of the financials involved. It's a scale so large, in fact, that it challenges many existing financial models. The company is looking to raise a staggering $75 billion. To put that into perspective, a capital raise of this size would actually be the largest in the history of public offerings. And here is the number that's grabbing all the headlines, a valuation of over $2 trillion. And this wasn't a slow buildup either. This figure jumped significantly right after the S-1 filing.
This rapid jump in valuation, and this is something Derek Munchow pointed out, really just shows how volatile this situation is. For any existing shareholders, it essentially renders any prior financial models they may have built completely obsolete. So, what does an IPO of this magnitude mean for the broader market? This isn't just a story for active traders. It also affects passive investors, people who might be pulled into this massive offering without even realizing it.
This warning comes from a commentary piece by Tim Schufelt in the Globe and Mail, published on April 5, 2026, and recently highlighted by Ethan Liu. The core idea is that proposed rule changes for major stock indexes could automatically funnel these mega IPOs directly into mainstream investment portfolios.
And here's exactly how that could happen. First, a mega IPO like SpaceX occurs. Because of its size, the company could be fast-tracked into major indexes like the S&P 500. Then, the funds that track these indexes, which, make up a big part of many 401ks and retirement accounts, are then forced to buy the stock. And just like that, you're invested, whether you chose to be or not. But, of course, not everyone is convinced this is a golden opportunity for the average investor. So let's look at a contrarian view from author and investor Jeffrey Stewart, which he laid out in his April 4, 2026 Fortune op-ed titled The Unicorn Trap. It really challenges the hype. Stewart's analysis presents a very stark comparison. Take an early-stage IPO like Oracle, which went public before it was a unicorn. It delivered a 2,700 times return to its public investors. Now, compare that to a late-stage, centicorn IPO like Facebook, which returned 17x. The difference in the outcomes for the public is massive. So Stewart's core argument is this. By the time these giant companies finally go public, the period of explosive growth has already happened behind closed doors in the private market. This leaves much less potential upside for the average person who is buying in after the IPO. So what's the bottom line here? The SpaceX IPO isn't just a simple story about one successful company going public. It's really a complex, market-defining event with far-reaching implications. What we're seeing is a convergence of several critical factors. It is a record-breaking financial event on a compressed and urgent timeline. It's also a systemic market shift that may force passive investors into volatile new stocks. This is a potential indicator of diminishing returns for public investors in these mega IPOs. And lastly, it's a capital-intensive event in a market where many other companies are already struggling to go public. This all brings us to a critical question for the modern market. Are these mega IPOs a democratized investment opportunity for everyone, or are they a forced systemic risk? It's a question that professionals and investors will have to grapple with as these massive events become more common. Thank you for watching. This is where we teach you AI and help you get smarter than your competition. If you like these videos, use the QR code at the beginning of this video to buy us a coffee or hire us to coach you or your employees in AI. We encourage you to subscribe to the AI for Career Success YouTube channel. Please like, comment, and share to help us reach a wider audience.